I put over $100,000 into one ETF, just one boring dividend fund, and now it's paying me more per month than some people earn part-time. I took $1,000 from my savings, $10,000 from my emergency fund, and $100,000 from my retirement portfolio into one investment, the Schwab US Dividend Equity ETF, SCHD. Honestly, what happened next still shocks me. That $100,000 chunk is now paying me more monthly income than some friends earn working 20 hours a week. The best part? I haven't touched a single dollar of the principal. All income comes from dividends. Pure, passive, compounding magic. I'm not selling anything. I'm sharing real data, real returns, and real income from SCHD over the years on $1,000, $10,000, and $100,000 investments. You'll see how reinvested dividends started rolling into a compounding snowball that's now borderline unstoppable. While everyone was chasing meme stocks or crypto, I was sitting back collecting dividends from SCHD like clockwork. This is about sane investing with real, measurable, repeatable results. You'll understand why Warren Buffett's quote applies so perfectly to SCHD. If you don't find a way to make money while you sleep, then. Now let me explain what SCHD actually is and why I chose it over hundreds of other ETFs. CHD is the Schwab US Dividend Equity ETF. It quietly tracks an index called the Dow Jones US Dividend 100. That index filters out the noise and includes large US companies that consistently pay and grow dividends. I took $10,000 from my emergency fund for passive income generation. I bought into SCHD and plan to reinvest every single dividend. In the first year, CHD paid me $350 in dividends, almost $30 a month without lifting a finger. $30 a month won't make you rich, but it covers your streaming bills, handled by Coca-Cola, Pepsi, and Verizon. In year 2, dividends increased to $385. In year 3, I earned $423.50, all without adding extra money. My original $10,000 investment grew to $13,240 after 3 years. The share price went up while dividends increased. That's a gain of $3,240, or a 32.4% return, all while chilling in sweatpants, eating takeout, and not worrying about market dips. $1,285 of that gain came from reinvested dividends alone. No guesswork, just the automatic drip of dividends buying more shares over and over. I didn't have to be a market genius, just needed to pick a strong, consistent ETF and let time do the heavy lifting. At this $10,000 level, the benefits of SCHD started to feel real. The passive income was enough to cover several actual expenses. Covered phone plans, grocery trips, car insurance, even while my original $10,000 grew by over 32%. CHD gives you both high income and growth. It's like finding a hybrid car that runs on coffee and gives you cash back every mile. I stopped seeing my savings as dead weight and started seeing them as little workers. Each share of SCHD hustling on my behalf, rain or shine. I took $100,000 from my retirement fund and put it into SCHD. That's when things stopped being interesting and started feeling like financial independence. After watching $1,000 grow, I did something most would call bold or reckless. I took $100,000, out of my retirement portfolio and threw it all into SCHD. I didn't ask a financial advisor. I just looked at the dividend history and said, let's see what this can really do. In year 1, my SCHD shares paid me $3,500 in dividends. That's nearly $300 per month, completely hands-off. That's a month's groceries, or a car payment, or 2 tanks of gas, plus your gym membership and a nice dinner with dessert. In year 2, that annual income increased to $3,850. By year 3, I was pulling in $4,235 per year, more than $350 per month, all from dividends. This is income that came in without selling a single share. My principal, the $100,000 I invested, was untouched. By the end of year 3, my $100,000 investment had grown to $132,400. That's a gain of $32,400, or 32.4%. Out of that gain, $12,850 came directly from dividends. That money didn't just show up, it bought more SCHD shares. The flywheel effect was fully in motion. Let's talk about what that kind of income can actually do. With $4,235 a year in dividend income, you're covering real expenses. That's enough for 6 months of car payments or a year's utility bills. You could handle several months' worth of groceries or reinvest into around 70 more SCHD shares each year for more income. Once your investment income covers real-life expenses, your brain rewires. You stop seeing work as the only income source. With SCHD averaging 10.5% annual dividend growth, a $100K investment today could pay you $9,000 plus in 10 years. You could double your passive income in a decade just by holding. No fancy rebalancing, just one plan. Be consistent. No market timing or panic selling. Just patience and reinvested dividends. And when that consistency meets scale, that's when SCHD turns into more than just a smart investment. It becomes a lifestyle shift. Now, I know what some people are thinking. Why not go with those higher yield ETFs like JEPI or QYLD? I mean, 8% sounds better than 3.5%, right? But here's the reality. Most high-yield ETFs sacrifice growth for short-term income. They hand you cash now, sure, but often by draining capital or giving you back your own money. SCHD takes a different route. It grows while it pays. It's built on quality companies with real profits, strong balance sheets, and a decade of consistent dividend payments. This means SCHD's dividends aren't just generous, they're reliable, and they increase. Over the past 10 years, they've grown by about 10.5% annually. That's huge. It also has one of the lowest expense ratios out there, just 0.06%. And in tough markets, SCHD has held up better than most. It doesn't just survive downturns, it keeps paying. So while others are chasing high-yield fireworks that fizzle out, SCHD quietly compounds in the background, doing exactly what a long-term investor needs. You don't need $100,000 to make SCHD work. You just need consistency. Whether it's $25 a week or $100 a month, it's the habit that matters. Reinvest the dividends. Let time handle the rest. That's how a snowball becomes an avalanche. Think about it. If you invest small amounts regularly, those dividends buy more shares, which then earn you more dividends. Before long, you're not just investing. You're building a second income stream that grows on autopilot. This is the long game. The sustainable game. You're not gambling, you're compounding. And with SCHD, you're doing it with companies that have proven they know how to generate wealth and share it. So don't wait for a perfect time. There isn't one. Start now, stick with it, and watch what happens over the next 5, 10, 15 years. Your future self will thank you. If you learned something today, don't just close the video and move on. Take action. Even if you start small, start now. Because every month you wait is a month you lose compounding power. If you want to see how just $25 a week in SCHD can grow into $5,000 per month in passive income, click the next video on your screen now. I break it down step by step with real numbers and real possibilities. Like, subscribe, share this with someone who's tired of chasing the hype and ready to build actual wealth. I'll see you in the next one.